A recent Bloomberg survey stated that economists place a 70% chance for a recession to occur in 2023. This survey has explicitly shed a light on future economic outlook of the United States, which is primarily caused by pandemic situation. Pandemic situation caused unemployment as well as government-backed stimuli, which then happen to also call for the rise of interest rate when inflation strikes. Though it is still uncertain in terms of what kind of effects it might bear towards Asia region as well as Indonesia, with the disruption in supply chain as well as tightening labor demand, steps of prevention are always more than preferred. But what kind of tax implication this phenomenon might have in store for us? It could mean many things. With significant economic disruption and inflation, steep decrease in economic activities, especially in consumption, might be inevitable. This will cause a lowered amount of tax that can be collected from consumption activities such as VAT as well as tax on luxury goods. Secondly, this phenomenon might also cause severe disruptions on tax collected on businesses. The rise of interest rate will also cause cost of borrowing or cost of capital to increase and further deduct corporate income tax collected. Lastly, recession will also cause severe volatility in the stock market, further hampering investment to enter and hinder economic recovery. With situations and tax implications presented above, we recommend the government to implement several measures.
While recession has brought sudden shocks in several commodities prices, opportunities for higher tax revenues arise due to a phenomenon called windfall. However, these windfalls are unpredictable. So, what other promising sectors can Indonesia explore to broaden their tax revenue base? Firstly, Indonesia needs to expand their accessible goods beyond tobacco. With the country's growing epidemic of diabetes, Sugary Drink Tax would be most promising in serving the dual purpose of reducing sugar consumption and increasing tax revenue up to 6 trillion rupiah annually. Secondly, extensification should also be done through updating the core tax system and implementing the CRM application. Next, with the acceleration of digital economy, the current digital tax or PMSE can be further optimized by regulating a VAT on cross-border e-commerce sales and the gig economy sector to ensure a level playing field between the digital and conventional players. According to the IMF, this could raise revenue up to $1 billion. However, this strategy should also be complemented by the next strategy to increase tax compliance.
Tax compliance is crucial for supporting tax revenues in Indonesia. As adherents of the self-assessment system, the government need to trust their taxpayers to calculate, deposit, and also reports their tax obligation into the system. We can see that from the graph, the compliance rate in Indonesia is increasing year by year, topping at 81.5 in 2021. However, this is still considered low to other countries. There are 10 primary strategies that we can do. However, I'm going to focus on number 1, 2, and 5. One solution is in education on tax. Currently, only accounting programs that have an introduction to tax courses. However, all students need to learn and understand taxes to become tax-compliant citizens after graduating and earning their income. Another solution is to digitize tax system to make sure that it will run better, faster, and also more accurate. This also can be done by using the ESPT and also e-filing that government already use. However, this latter can be improved by using chatbots and also interactive tutorials in DGB Online. Lastly, the government need to ensure the citizen to pay their tax by making the state-owned budget as transparent as possible, also have a positive impact towards the country. Also, this can be done by giving information towards the citizens to make sure that they have the knowledge to know the genuine impact of the tax that they already pay.
On top of that, upon facing digital transformation, the digital economy has a crucial role to transform the tax infrastructure and support government policy making. The internet penetration rate in Indonesia is predicted to reach 82.53% by 2026 as a result of irresistible impact of globalization and advancement. So, extensive exposure of digital tax circumstances to taxpayers has to be leveraged. Data from OECD shows that one of the biggest tax structure components come from CIT with a share of 27.4%. Vulnerable practice of tax avoidance, especially about cross-border transaction with significant amount related with BEPS, inflicts a financial loss of $4.84 million. So, how could government maximize this potential? Government can use blockchain technology to further enhance the tax system, starting from the information exchange until the automation of the tax collection process. We believe by implementing our initiative, government can create a more traceable, trustworthy, trackable, and credible tax system.